There's all sorts of advice being passed around on social media right now. When it comes to tax advice, some things may actually be too good to be true. Let's see if that hot tip you got is tax fact or tax crap. Tax fact or tax crap. The new tax bill makes overtime pay tax-free. That is tax crap. There's nothing in the One Big Beautiful Bill Act that specifically exempts overtime from income taxes. Overtime pay is still considered taxable income, just like regular wages. With that said, the new legislation has created a new deduction that will allow many to avoid tax on up to $25,000 of overtime pay. To qualify for this deduction, the overtime must follow the standards set out by the Fair Labor Standards Act. Single taxpayers will be able to deduct up to $12,500 of overtime pay on their tax returns, and joint filers deduct up to $25,000. There are 5 things to remember about this deduction though. First, the overtime must be reported on a W-2 or similar form that is reported to the IRS to qualify. Also, the deduction is subject to income limitations of $150,000 for single filers and $300,000 for joint filers. If you're married and file separately from your spouse, you are not eligible for this deduction. This deduction applies even if you take the standard deduction. Lastly, this deduction is temporary. It only runs from 2025 through 2028. Are you putting in some extra work for extra pay? Reach out to an Alloy Silverstein professional so we can help you plan to keep more of it in your pocket. If you want to know if your tax tip is tax fact or tax crap, leave a comment down below and give us a follow to stay up to date.